Hello, Howard.
Greetings. How's my fellow egghead? To approve.
Good afternoon.
Good afternoon, everyone.
Good afternoon, everyone. It looks like it's 2:02, so in the interest of time, let's get started. Thank you everyone for joining our webinar, Once More Into the Breach, Addressing Florida's Property Insurance Crisis in the Post-Ian Environment. I will share a brief agenda with everyone, just so everyone knows what to expect. Just a reminder for everyone to keep their microphones muted, cameras off, and if anyone has any questions, please feel free to drop them into the chat and we will address them towards in our Q&A, which will be towards the end of the presentation. So without further ado, I will hand it off to our dear Dr. Frank.
William, thank you so much. And I'd like to welcome everyone to today's webinar. I can tell you, Scout's honor, we did not plan it this way. We did not plan this thinking that we would actually have an extraordinarily rare event here, one of 3 named hurricanes over the last 8 decades or so. Thanks for being with us. Lillian went over the guidelines, and yes, we do ask that you keep muted. And if you have questions, please feel free to put them in the chat box and we will get them post presentations. So with no further ado, let me give brief introductions. We have 3 really top tier presenters today, 3 amazing colleagues here at FIU. Meteorologist Erik Salna is Associate Director for Education and Outreach at FIU's Extreme Events Institute, and he will give you a bird's eye view as our resident weatherman to tell us what's going on. Dr. Shahid Hamid, Professor of Finance and Chair of the Finance Department at the College of Business, who has been following Florida's insurance markets for, well, it seems like decades, and he will clue us in on what is happening in the insurance realm. And last but certainly not least, my colleague at the Perez Metropolitan Center, Maria Ilcheva, who is our Assistant Director of Planning and Operations and has been studying people's behavior for with regard to hurricane planning for seemingly decades at this stage. So each offers a different insight, but all in, we have a 360-degree look at what's happening here as we hit the end, hopefully, of the hurricane season. So with no further ado, I will turn this over to my colleague, Erik Salna. Take it away.
All right. Thank you very much. Appreciate it.
Good afternoon, everyone. As mentioned, I'm meteorologist Erik Salna, Associate Director of Education and Outreach at the FIU Extreme Events Institute. I'm going to be kind of overviewing the 2022 hurricane season. And before I get into that, I thought we'd start off with a brief weather briefing on Nicole. So I'm going to go ahead and show a few graphics to kick everything off. And here we go. All right, Lilium, can you see my cone graphic? Excellent, thank you. All right, this is from the National Hurricane Center. This is the advisory cone as of 1 o'clock this afternoon, saying that Nicole, it has 45-mile-per-hour winds, so still a tropical storm. And you could see it is located just north of Tampa, and then the cone takes it briefly into the Gulf of Mexico, not really expected to intensify, and then move it up into Georgia, and then into the Carolinas and Virginia. And that'll be a part two of the story, if you will, a possibility of flooding in those higher elevations in the mountain areas. So we'll be watching that. And I'll show you now. Satellite loop, Lilium, you can see that? Excellent. So here's the visible satellite picture of the storm. And quite a very large circulation. That was a big story with this system. And lots of clouds associated with it, lots of moisture. And down here in South Florida, though, just partly cloudy conditions. So most everything associated with the storm is well to our north. And now I'm switching to a radar view. You can see that, Lilium, as well, the new one. Okay. This is the local NBC6 Doppler radar, which is a great radar. You can zoom in and out and follow the track of any storm. And this is how it's been looking for the last several hours. Again, a wide circulation and still some pretty good heavy rains in the Tampa-St. Pete area as well. So still a rain producer, but just tropical storm force winds. And it's had impacts across the state for sure. And switching now, wondering how bad was it up north? Well, I'm going to switch now to a Twitter video. You can see that, Lilium? Excellent, thank you. So this was shot up the coast, I believe near Daytona Beach. This is what's happening. And this is the result of Nicole, but it's also, I'm calling it a 1-2 punch. It's the combination of what Hurricane Ian did earlier, as far as beach erosion up the Florida coast, and now add in Nicole's effects, which was tremendous pounding of wave action for several days. And now you can see what's happening to structures and homes right along the coast. I heard in the community Daytona Beach shores that many condo buildings have been evacuated because they're just deemed not safe. Okay, very good. At this point, we'll switch to my PowerPoint. So I think, Lilium, you're going to show that. There we go. All right, excellent. Thank you. So there's our cover slide for our webinar here and the listed speakers as we've already introduced. And so next slide. So there's my contact information here at the FIU Extreme Events Institute. And as I mentioned, I'm going to overview now the hurricane season. Next slide. And if you'd like to follow the Extreme Events Institute, here's all our social media addresses on LinkedIn, Facebook, Twitter, and Instagram. So just briefly, the Extreme Events Institute and the International Hurricane Research Center, several areas of research, including Disaster Risk and Resilience in the Americas program, the Florida Public Hurricane Loss Model, which you're going to hear about today, a storm surge model CEST, where we work and collaborate with the National Hurricane Center and the public opinion and the politics of risk reduction. And I'm sure many of you have heard about our wall of wind. That's the other area of research that we do officially with the National Science Foundation. It's an NSF Nahiri research testing facility where we can test structures up to Category 5 hurricane conditions. And we announced earlier in the year a new vision of a larger research facility affiliated with the National Science Foundation and a team of 9 universities, where the vision is to create now a larger facility that will go up to 200 miles an hour. We go to 160 with the current wall of wind, and incorporate a wave tank with that facility. So now we can combine wind and water when we test structures. So we'll keep everyone posted on the progress of this project. And one more area I just wanted to mention, we also have a grant from the Mellon Foundation. So we do a lot of science-related research, and now we go to social science, if you will. And within the community, the Mellon Foundation awarded us a grant to help now vulnerable communities prepare for, recover from disasters. So we'll be working on solution sessions and what it is we can do to help all communities and all residents of South Florida be ready for the next storm. And front and center on the Extreme Events Institute is the risk equation. I just wanted to briefly mention this because this is kind of an overview way of how we can talk about hurricanes in general and natural hazards. On the right side, you have H, which is the hazard, and then EX is exposures, and V is vulnerabilities. And that all will determine the left-hand side, whether it's an emergency, a disaster, or a catastrophe. Next slide. So an overview question seems like a simple one, and that is, are there natural disasters occurring around the world? And the answer is no. Now, what do I mean by that? Next slide. Well, looking at this perspective, there are no natural disasters. There are only natural hazards. Natural hazards occur all the time, but they only become disasters when they collide with our human, physical, and economic systems. So we build towns and cities where natural hazards occur. So the term puts too much blame on nature and not enough on how and where we built our communities and how we have created our own exposures and vulnerabilities. Next slide. So Florida, third most populous state in the country. Also the hurricane capital of the US. So in red, I have the question, is this a collision waiting to happen? And it is. And it does. And we're going to hear more about that today. The hurricane season, here are the names. Here was this year's list. And you can see we made it from Alex all the way to Nicole. Hopefully that's it. No more names. Next slide. The numbers, well, an average season is 14, 7, and 3. Named storms, 7 hurricanes, 3 majors. Last year was 21, 7, and 4. Very active. This year in yellow, I have in parentheses what the forecast was, 18, 8, and 4. And we're happy that it came in a little under the forecast. Of course, the season doesn't end until November 30th, but current numbers are 14, 8 hurricanes, and 2 majors instead of 4. Let's hope that doesn't change either. Next slide. So this was Hurricane Ian. This is the infrared loop as it approached Southwest Florida. Next slide. We're switching now to the visible satellite loop. And you can see how it was just an extremely very large major hurricane. Next slide. And this was just an incredible picture that was taken. There's the eye just before making landfall in Southwest Florida. Next slide. So after the storm, lots of research and science comes in, and we've even had members of our Extreme Events Institute and Wall of Wind team already go to Southwest Florida and start looking at the damaged buildings to see what did well, what didn't do well. And this was a picture that was labeled showing the different ages, if you will, the years the various buildings were built. And I think what we're going to see is that the newer buildings built to the newer building codes, it actually works. Southwest Florida, Fort Myers Beach had missed a major landfall for many decades. So there was certainly a mix of old and new construction in that area. Next slide. But another takeaway was the forecasting part, and that was the cone. And the misinterpretation or the miscommunication, or just not having an understanding by the public of what is the cone, what is it showing us, and how are we to use it. And I have on the title, Tampa, Tampa, Tampa. Well, when you look at this cone, that's where the center skinny black line goes to. But I have also to say, don't focus on the skinny black center line. That is not exactly where the storm may go. And it could be anywhere in the cone. And that was part of the problem with Ian, and one of several problems. And Fort Myers was in the cone. Fort Myers was under hurricane warning. And obviously that's where the storm went, not to Tampa. Next slide. National Hurricane Center always says we need to focus on the hazards which happen outside the cone. And when you go to the web page, like for Nicole, you'll see this assortment of graphics. And this is what all of us need to focus on, because that's what's most important. Next slide. This is another graphic. This is from the Weather Channel, showing the cone outlined in red. But the point being that there were that coastline was under storm surge watches and warnings. So the warning and watches were out and in place before Ian made landfall. Next slide. So it now brings in social science research because of human behavior and communications. Why did so many people not evacuate Fort Myers Beach and Sanibel Island? That question is open-ended, and there will be many answers as now this other area of social science research will come into play. I have here also what's called the cone conversation. That was done by Jamie Rome at the National Hurricane Center after Ian. There's the web address. We'll put it in the chat. It's an excellent conversation after Ian to try, where Jamie talks about the cone and what it means, and more importantly, what it doesn't mean. Next slide. And just a couple of educational things that we've done here at EEI. I just want to let everyone know, if you want to learn more about all of these topics of preparedness and science, we put together a 12-part hurricane education video series. Next slide. And it was a collaboration with the Museum of Discovery and Science and the Florida Division of Emergency Management. So all of these topics are covered. Wall of wind, forecasting, National Weather Service, boat preparedness. It's a great resource. Next slide. And one last thing is that we work with the National Hurricane Center. We also have the Spanish language hurricane information website, huracanes.fiu.edu. Again, there's our social media addresses, and I thank you all for your time today.
Thank you, Erik. Well, we've had our leadoff hitter, second at bat, my colleague from the finance department, Shahid Hamid. Take it away.
Okay, next slide. Yeah. I'm, by the way, also affiliated with the Extreme Event Institute. I'm director of a lab over there on insurance. Okay, In the last 5 years, on the average, the homeowner premium has increased by 100%. And the insurance companies, however, despite this dramatic increase in premiums, have been losing money. They have had about $1 billion underwriting loss pretty much every year. We've seen about a dozen companies be declared insolvent or leave since early 2020. 6 have dropped out this year, and 30 more are on the watch list. And I believe about 17 of them are likely or already have been downgraded. And that's a big thing. You know, you have to have an A rating rather, for mortgage companies and so on to accept homeowner insurance for their mortgages. And next slide. Now, Ian could be very costly. Estimates range from 30 billion to 60 billion. However, I should caution that a significant portion of them would be flood loss, which is covered by federal flood insurance. So the insurance companies in Florida are not really responsible for that. It is likely some of these companies on the watch list will leave or will be insolvent. That's going to put more pressure on citizens, which is really the insurer of last resort. The estimated, and this estimate kind of varies from year to year, the capacity for Florida insurance industry to pay out is about 60 billion. And despite recent insolvencies, this is so far resilient, and it should be able to pay out Ian claims easily, but it's vulnerable if there are multiple major hurricanes next year. Next slide. So what happened? Starting with Hurricane Andrew in 1992, we've had really a long-term insurance crisis. We've had periods when things were okay, but then back to crisis. So there's essentially a great uncertainty about the nature of risk and what the losses are. When you have automobile insurance, you have so many claims, hundreds of thousands, that you can draw up a very nice loss function, and you can determine based on the mean and other properties of the distribution how much you should charge and so on, what the pure loss is. You can't do that because for hurricanes, because there aren't that many observations. So so essentially when there's uncertainty, there's a tendency for companies to charge more than what the mean of the presumed distribution would be. So rates have increased dramatically. In 1992, if you had a $300,000 house in Miami-Dade, you were being charged something like $150 to $200 premium just for the insurance, for the hurricane risk, which was kind of ridiculously low in some sense, because actuarially what they did was they looked at the last 10 years, 20 years of history, and if no hurricane, they wouldn't charge much. But this sort of way to determine rates leads to a lot of volatility in premium, because if you have a hurricane, you're going to have a big spike because, in their losses, for the last 10 years losses, you're going to have a big spike in losses, and they'll charge a lot more. And as time goes by and there's no more hurricane landing and so on, then rates will go down, and then, another strike and spike up again and so on. So we needed some kind of catastrophe model, physically based, which will give us a better, more stable estimate. So the crisis increased with multiple hurricanes in 2004-5, and recent 2017-18 Irma and Michael became acute. However, because of really increased insurance fraud, having mostly to do with roof and assignment of benefits since Irma. Next slide. So what did Florida do? It created the following institutions. First, the Florida Cat Fund. In the 1990s, actually, I was a technical advisor to a task force that made recommendations about this cat fund. And this is critical to the stability of the insurance industry. It's like a reinsurer for Florida insurance companies, but it's tax exempt, unlike private reinsurance companies, so it can build up reserves faster. Once a certain trigger is reached, that means the aggregate losses, from a hurricane, let's say $7 billion and so on, insurance companies can go to the fund and get reimbursed, and they can buy coverage of 45%, 75%, 90% of the total exposure. It's a cheaper source of premium, and it's really helped stabilize the market. Now, it's got about $12.3 billion in funds, plus about $3.5 billion in pre-event bond proceeds for a payout capacity about $15.8 billion. So the estimates for how much it may have to pay ranges from $4 to $12 billion. And it's the best probably estimates about 10 billion in claims. and it certainly has the capacity to pay that. But it could be short in 2023 if another major hurricane hits. So capacity next year will be 7.4 billion, but it has the ability to issue $8.4 billion in post-event bonds, and then also impose surcharge on companies. So far it's in good shape. Next slide. So Florida also created Citizen Insurance Company, which is insurance of last resort. It's in good shape essentially because even though 3 years ago, Citizen had 500,000 policies, now it's got twice that. All the insurance companies that left, their policies have migrated to Citizen, so their exposures have gone up dramatically. But it has about $13.7 billion in payout capacity, half about cash, half about reinsurance. It only insures up to $700,000, and $1 million in Miami-Dade and Monroe exception. But more importantly, if it runs out of money, it can do a bunch of things. It can basically do a one-time assessment of up to 45% on the premium for its own policyholders, 2% one-time investment on everybody's insurance, including auto, life insurance, and up to 30% multi-year emergency assessment on citizens and other property insurance until the deficit is covered. So it's got all these alternative sources of funds in order to cover its deficit. Next slide. Florida also created a long time ago Florida Insurance Guarantee Association, which pays claims on policies of companies that become insolvent. It charges right now it's charging about 1.3% of premium, and it can also impose surcharge. And then recently, the state basically created a reinsurance fund administered by citizens to which insurance companies, especially smaller and vulnerable companies, can go to. And especially if they get downgraded, the reinsurance availability that they have access to can act like a co-signing of the loan, so the mortgage lenders will continue accepting coverage from such companies. Next slide. So what's the reason for the crisis and the recent big increase? Well, we obviously have the increased risk. Well, we have, I should say, hazard, hurricane risk, and so on, which is being modeled more and more. And the substantial increase in coastal exposure. There's an increased cost of reinsurance, and then you have a big one, which is cost of lawsuits and fraud, having to do with the assignment of benefit, and also the problem of wind versus flood that I'm going to talk about in a minute. Next slide. So I'll address these individually. So Florida ranks #1 in property insurance valued exposed to rather hurricane winds, and #2 exposed to storm surge. It's got $4 trillion in insured property, but 2.18 trillion are residential, and all are exposed to hurricane risk. There's no safe place. 79% is coastal, which is particularly vulnerable to hurricane risk. 400 billion, particularly vulnerable to storm surge. Now, 35% of the flood policies, which is administered by FEMA, and 30% of the premium originated Florida. And while 88% of homeowners have homeowner insurance that covers windstorm, only 18% have flood insurance. Next slide. So another assessment of risk. Well, basically, there's a 40% chance in any given year that there'll be a hurricane. 26% or so, one hurricane. About 9.4%, two hurricane. 2.8%, three hurricane, and pretty low chance of getting a four hurricane. Next slide. Now, this is the worst case scenario. From our model, we have what we call the Florida Public Hurricane Loss Model, Catastrophe Model. So this is a track of a very large, very intense Cat 5 hurricane, which comes from below and goes through slightly inland, through and hits most of the coastal cities, major cities, and it's a little bit inland, so it affects Orlando in a big way. And you can see that it's slightly inland. The right side, the more stronger side, will be faced by, Miami-Dade, Palm Beach, Broward County, and Brevard County and all the way up. So this is, this would, our estimate is caused about $150 billion in insured losses alone. But this is, more like a 1 in a 5,000 year event or something. However, with climate change and so on, these probabilities can certainly change. Next slide. And Irma, by the way, was originally tracking this, before it moved west. Increase of cost of insurance. The reinsurance premiums have gone up 15% this year. But in Florida, for many property insurers, the rates of premiums gone up 50%. So it's a big increase, and it's being passed on to the homeowners. Next slide. Cost of lawsuit. There's increased legal costs for insurance companies. About 79% of property insurance lawsuits nationally originate in Florida, even though there are only 9% of the claims are originating in Florida. In 2019, insurance companies paid $3 billion in legal costs just fighting lawsuits, and they of course passed it on to the homeowners. And the big source, two big sources of lawsuits. One is assignment of benefit, and the other one is the wind versus flood conflict. And also, especially assignment of benefit, both of them actually have led to an increase in not just legal fee, but claim payments. Next slide. So assignment of benefit, very costly. Problem is partly fraud, partly taking advantage of loose regulation, court decision, and so on. Allows policyholders to give permission to contractors, adjusters to bill insurance companies and settle claim directly. It's like, contractors are now the policyholders, so obviously they're going to go for the max. They can create fraud, unnecessary repairs, mostly related to roof damage. Contractors tell owners with old roofs that they can get new roofs by claiming damage from recent hurricane, even if there have been only a few tiles damaged, and they've been doing it years afterward. Insurance companies are therefore raising rates or dropping policies for older homes. If the insurance company determines the damage wasn't actually covered or the claim is excessive, the contractor will sue. They've got lawyers lined up. And so the insurance company is stuck either fighting the lawsuit, expensive, or just paying up. Either way, it's costly. Next slide. Also in Florida, over 88% of the homeowners, as I said, have insurance policy, but only 18%. So it's often difficult to separate wind damage from flood damage, particularly where structures demolished and there's no watermark. Water damage from infiltration through damage windows or roofs or garage doors is covered by wind policy, but due to rising water, it's not. So many homeowners without flood policy try to claim water loss through their wind policy premium. The result is in thousands of lawsuits, an increase in premium, and it's going to happen with Ivan. With the recent hurricane. With Michael, it happens, and you can bet there'll be a lot more lawsuits because there's significant part of the losses due to a flood. In 2016, the Supreme Court ruled that when it is not possible to establish which hazard caused damage, first the concurrent clause is applied, even if wind was not the major cause, as long as contributed some, the entire loss may be covered by wind policy. So the insurance company started inserting anti-concurrent provisions, which resulted in more lawsuits. So this is going to be a big issue with Ian claims. Companies actually are offering big discounts for sharply restricted water damage because of this. I mean, my insurance premium, I live 20 miles inland, went up from $3,000 10 years ago to $10,000. But I was offered a $3,000 discount if I restrict my water coverage to $10,000. But I'm risk averse, I refused. Next slide. So this is really a big issue, and we're hoping that, for example, the surge and wave testing ground that we have established and so on may help us answer some of the questions as to how which is damaged first, under what conditions, and so on. Solution to the crisis: improve capability and accuracy of CAT models, particularly with better data, reduce legal cost and fraud, and for that some legislative action will have to be taken, and some were taken but not enough. Develop cheap, effective mitigation methods and technology, And improve building codes further, strengthen the CAT fund, shift risk, and finally shift risk to the capital market through increased use of CAT fund and insurance-linked securities. And also, at some point, you may have to restrict the height of the condo buildings and so on. In Miami, we're kind of developing super skyscrapers, but if things get really bad, and I'll just mention that quickly. Next slide. We have a catastrophe. Basically, insurance premiums are now set using average annual loss and PML estimates for insured policies that are produced by CAT models. So the accuracy of the CAT model is important. So we have one, we built one, and it's a multidisciplinary and complex model. It's been used 2,000 times by Florida OER to evaluate not only rate filings and regulating them, but also to conduct stress tests for solvency for 60-70 companies annually. Next slide. But the model is as good as the data that goes in. So while the meteorological data and actual data are relatively better, the building engineering, street level, terrain data, like building features, all the different features in a structure, strength of construction, mitigation, terrain roughness, elevation, are often deficient, which means that we cannot use the full capability of the model. We've done extensive survey of the building stock, and based on that, we've created about 10,000 different vulnerability functions of different combinations of features, but we have to know what those features are in order to pick the right vulnerability functions for a particular house. The insurance companies and counties offices need to collect more detailed and better quality data. Next slide. Winds at 100 meters are 50% higher than, the wind speed goes up exponentially with the height. So if you have a Cat 1 at the surface, you're likely going to have a Cat 3 at 10th floor. And so high-rise buildings are vulnerable to higher wind speed, not so much because they will have, damage to the structure, but because of water intrusion through breaches and openings, and condo losses will increase with height. And rebuilding cost gets higher, increases with height. So this could be a problem if, due to climate change or something, we have more frequent, more severe hurricanes and so on. Next slide. Mitigation, very important. Keys to develop relatively inexpensive features and technology that can be applied easily. Okay, so for wind, it's mostly to reduce roof damage, breach of openings through stronger roofs, stronger roof-to-wall connection and window protection. Flood is mostly about elevating the building, stronger slab-to-wall connection, reinforced masonry. Most houses don't have really reinforced masonry, just concrete blocks, and allow water to pass through the house quickly through openings. Next slide. So this is, some of the estimates we have through our model as to what the reduction in damage would be with different, for example, HIF roof is better than gable roof. It can bear more wind load, and so the damage would be less. So on top, the top curve is without mitigation, and then as you apply different mitigation features, the losses really go down, or the curve goes down. Next, and this is particularly true for mobile home. Next slide, where this is pre-1994. This slide on top is rather the curve on top is for mobile homes which were not tied down and under the old regulation and so on, and under the new regulation, and dramatic decline in losses, and we have tested that through field studies and so on, post event data and so on. Next slide. These are some of the reduction in damage due to different mitigation features. So, something like a AD nail, use of that can have a pretty substantial, lead to reduction in losses. Better roof-to-wall connections, using, for example, straps instead of toenails or clips, you get a substantial reduction in losses. Next slide. And collectively, all these different features can lead up to 40, or even actually under some new estimates that we have even higher reduction in losses. And some of the estimates have been are based on some of the studies that our engineers did with the wall of wind at FIU. Next slide. So how does it matter? Look at the premiums. So I looked at the premiums about 24 companies. So 2% deductible, $300,000 coverage, masonry home. If it's 1990 built, okay, Unmitigated. In Miami-Dade, the premium is median premium is 20,000. Broward 17, Pinellas County 9,000. Bay County, where you had Michael, at 7,000. Same home, if you mitigate it, look at the premium, goes down from 20,000 to 9,000. Broward 7,500. And if it's built according to the new code, it's $7,500. So you get a substantial reduction in premium if you have those mitigation features. I mean, the insurance companies are not going to, just give you a discount. They have to have, some, estimates and so on, which are models and other models, CAT models provide. And with the help of OER and so on, discounts have become available, and it's substantial. So it really matters to mitigate your home. Next slide. However, one of the lessons we've learned is, biggest damage from hurricane is really roof to wall connection and so on, and the fact that we have wooden roofs. Wood roofs are not suitable for hurricane-prone areas, period. Okay, we need a big rethinking of about how we reconstruct our homes. We need to have concrete roofs. I mean, you have old, 100 years old concrete or stone buildings in Havana, for example, Puerto Rico, that have withstood multiple hurricanes. And it just doesn't make sense. I mean, you look at the photo of damaged homes after hurricane, and there's a lot of timber lying around. It simply doesn't make sense to have wooden roofs. However, we like those sloped roofs with tiles on them. They look nice, and if you got a wooden flat concrete roof, it looks ugly. So architecturally, we have to basically make it acceptable. And engineers at FIU have patented about 1.5, for example, inch thick, lightweight, strong concrete roofs with waves to mimic tiles and can withstand up to 200 miles per hour. They're cheap to build and install. Next slide. However, this acceptance by the construction industry is a long way off. So this is this example of the type of tile that can really withstand rather concrete roof that can withstand hurricane. Next slide. Let's skip that. Next slide. So I'm going to wrap up by talking about what the long-term really solution, one of the solutions could be, is transfer of risk to the capital market. Total worldwide capitalization of stock and bond markets in hundreds of trillions. Stock routinely go up and down over $1 million in value daily. Capital market can easily absorb huge CAT losses. So there's a large unused capacity to transfer CAT risk to the capital market through CAT bonds and other insurance-linked securities. In 2021, there were $20 billion property-related ILS outstanding since '97 when they first started. Just the CAT bonds alone have about $138 billion have been issued, but that's not enough. It's a small amount relative to the exposure. NFI, for example, has only $1.2 billion in CAT bond outstanding. They were not as attractive, even though they paid a lot more, interest and so on, because the stock market was doing so well in the last 10 years, 15 years, or especially in the 90s. So you can create a special purpose vehicle, and it can enter into contracts with the sponsor of insurance companies, which collects premium. Next slide. And the SPV issues CAT bonds to investors, collect proceeds, et cetera, et cetera. The point is that if the CAT event meets a certain trigger, if the losses exceed a certain trigger, the SPV will liquidate part of the collateral to pay the sponsor, and investors will lose part of the principal. So the risk to them is that if there's a major hurricane, and their losses, but small amount losses doesn't matter. But once it exceeds a certain trigger, the principal that will have to be paid back starts decreasing, and but they get higher interest rate. If no qualifying event happens, they get paid back in full, and they earn higher interest. So and then CAT bonds from an investment point of view are good for diversification. They have low correlation with the economy and the stock market, but they're still pretty small. And the reinsurance company obviously is going to push back. And so the point is, if the reinsurance pricing becomes unacceptable, or it's just not unbearable, then maybe we can go to the capital market and create a lot of these bonds, which will be somewhat costly, but not as costly as the reinsurance. And that's my presentation. Thank you.
you very much. Well, now we go to our cleanup hitter, Maria Ilcheva. Maria, you have the floor.
Thank you very much. And I will start sharing my brief presentation now. Welcome everybody from me as well. What I will talk about is our poll, the annual poll that we conduct with some interesting results related to insurance, but also many other topics related to mitigation, preparedness, vulnerability assessments, and general risk perception. Lillian, can you confirm that you can see it? Awesome. All right, so I will talk about some of these findings that we discover every year. We follow the trends, and sometimes we have new discoveries in terms of how things are changing from the perspective of Florida homeowners. But for over a decade, actually since 2006, we have been involved in tracking the Floridians' culture of preparedness through this annual poll of coastal county residents. The most vulnerable areas, the most vulnerable populations from the perspective of these natural hazards are located in these coastal areas. And we're also researching various other topics related to resilience that will speak we will speak on through this presentation. Our research focus is, in general, is aimed at reducing this ethic of passivity in the population that obviously negatively impacts our ability to prepare for and cope with disasters as communities, not just as individuals. And we take into account various developments related to COVID. We've asked questions about how COVID has impacted people's ability to prepare, or the plans that they have to that they are developing to prepare both in 2020 and 2021. We ask questions about flood perception. We ask questions about evacuation. Obviously, in the brief time I have, I cannot cover everything. But this presentation, Lillian will post the link, is also available on our website. So if you miss something as I'm speaking, please feel free to download it from there. The focus of our research has been, as I said, on Florida's coastal counties. And from the perspective of NOAA, the National Oceanic and Atmospheric Administration, 61 and Florida's 67 counties are considered coastal, right? It doesn't necessarily mean that they touch the coastlines, but they're close enough that from the perspective of risk and possible damages, they're labeled as such. As I said, while the topics of our research have varied over time, one endeavor that has been consistent has been this generally labeled hurricane mitigation poll, with specific additional questions asked every year just to keep it fresh, and as new topics emerge. For example, when we started back in 2006, we didn't ask questions about sea level rise and how it impacts homeowners. And that has become the one of the standard sets of questions that we are now including. So in the next few minutes, I'll go through these slides, but I wanted to give you some bird's eye view, some of the main highlights that we discovered in the 2021 poll, which, by the way, every year is conducted in the beginning of hurricane season, as we try to gauge in June how well people are prepared to weather a storm, whether they have any types of plans, be they related to evacuation, or how they will, what supplies they will buy, how much they will buy, etc. First, we find that there is a growing expectation, and here I'm speaking in terms of trends, a growing expectation that government, especially state and local governments, should play a leading role in resilience. Secondly, we found that an increasing number of homeowners are willing to accept tax increases to pay for government initiatives that mitigate risk. When we started asking these questions several years ago, it was about 1/3, and actually this year, for the first time through this poll, there is a small majority who are willing to accept tax increases. But on the flip side, we see an increasing number of homeowners who are willing to cancel their homeowners insurance. Obviously, as Dr. Hamid mentioned, as insurance premiums rise and housing costs also rise, that may be having an impact. We will go over some of these results, and I'll show you some of the charts that are relevant for these findings. But first, a long trend view. The trend analysis here shows there is a hurricane effect on preparedness, or I should say an uptick in preparedness immediately following a major hurricane disaster. That effect, as time goes by, tapers off, especially in the absence of a direct impact in following years. So after a couple of years without a direct hurricane threat, Florida residents reach a certain level of complacency, which is the opposite of what we thought after the 2004-2005 seasons, where we saw claims that we have a culture of preparedness now as a result of these damages, and hurricane mitigation is on the forefront of homeowners' minds. Adding to that trend of complacency is the significant number of people in Florida who may have never experienced a hurricane, as either they have moved from another state, or from abroad. Especially in the last few years, we have about 500,000, 500,000 people who have moved into Florida, either from abroad or from other states, and they may not have the same knowledge, the same information, the same risk assessment as those of us who have lived through hurricanes or under hurricane threat. So the 2020 results, for example, as you see here, show the impact of the previous season and the pandemic. The 2019 Atlantic hurricane season, as you may know, was the fourth consecutive above average and damaging season dating back to 2016. And as a result, we saw an uptick in the perception of vulnerability, but a lower percentage indicated willingness to evacuate if ordered. As my colleague Erik Salna mentioned, that is still a developing area of research, of developing topic for discussion. How do we communicate information? What types of informational platforms or tools or messages need to be developed in order to make sure that the people who need to evacuate do so, those who need to stay in place, staying in their homes or stay in the vicinity. So there are still many issues to resolve in terms of communications. Next, I also want to talk about some new questions that we started asking since 2017 that assess some local government planning and policy efforts to mitigate the impact of hurricanes. These are actions local governments can take to reduce the human and financial costs. After Andrews, those efforts focused on revising and updating the building code and dedicating resources towards enforcement. Our survey results actually show that a very large percentage of homeowners have reasonable to very high confidence in enforcement. Over the years, usually in the low 80%, about 83% in the latest poll. I also want to say that although we expected a decrease in that confidence as a result of the Surfside building collapse, that result did not occur. That's why in this particular chart, I'm showing you just the comparison of results over the last 2 years. In 2017, though, only about 2/3 had a high degree of confidence that local land use planning takes into account hurricane risks, or that new development takes into account flood risks. And we see an uptick over the last 5 years in that confidence, as a larger number of jurisdictions and residents are starting to pay attention and understand the importance of such efforts. All of these are efforts that could improve community resilience if implemented properly. On the topic of resilience, we also ask questions on specific actions governments could undertake to mitigate the negative impact of sea level rise. We see significant increases in residents who are inclined to support government action across all measures, but there is no consensus, or at least previously until this year, a significant majority across any of these measures who agree on these actions. You see here in 2020, the largest, a small majority said 51% said are inclined to accept the establishment of legislative authority to better regulate development. We'll see if that trend continues, or if we just saw an uptick as a result of, again, Surfside, or as a result of specific impacts of hurricanes. In 2022, 47% agreed on the need to implement stricter elevation plans for homes in vulnerable areas and for governments to have authority to regulate development, which was up from 41%. In 2017. Another big change over this 5-year period was the increase of those favoring buyouts from 20 to 27%. This is quite significant, as when we started asking these questions early in the earlier years, a similar question, it was in the single digits, the percentage of homeowners in coastal areas who said that they favored buyouts. With the realization that government measures most likely will have costs, we also ask questions about willingness to pay for these measures. First, in 2022, about 18% indicated no action should be taken, which is down from almost a quarter in 2021. So again, similar, consistent with the previous results that I showed you, as awareness increases, as seemingly better understanding of the risks happens, we see these upticks in some of these questions. These fluctuations obviously are affected by economic conditions. Last year, only 46% were willing to accept property or income tax increases, but this increased to 54% in 2022. If you follow some of the results of the local elections, and certainly in the Tampa and the Jacksonville region, it seems that based on some of these ballot measures related to housing, related to financing higher education, these tax increases seem to be more palatable to homeowners, despite, again, housing increases and inflationary pressures. But given the continued effects of the pandemic on some households, a reluctance in very large percentages to pay is unsurprising. Another explanation may be related to the growth of the state and the influx of residents, as I said, from other parts of the country or other countries. Lack of experience with hurricanes, flooding, and flood and wind damage may be creating this inadequate risk awareness. In our trend data, we also show fluctuations in relation to homeowner insurance. But over the last few years, we've seen an increase in homeowners, and this is very significant considering the significant damages we are seeing now from Ian. An increase in homeowners who would forego having homeowners insurance if their home was paid off. Having a policy, as you know, is a requirement for mortgage lenders. So once that part is removed from the equation, it is possible we may have large numbers of uninsured or self-insured homeowners, those who put away money into a savings account in lieu of paying for insurance in case something impacts their home in the future, so that kind of a piggy bank for insurance. This kind of trend obviously is linked to what Dr. Hamid was talking about earlier, the significant increases in homeowner insurance rates. It might also be connected, as I said, to the inaccurate assessment of risk. This graphic shows the distribution of responses in terms of the factors that affected homeowners' decision to purchase their home. Unsurprisingly, neighborhood, school quality, and price were the top three. And I should say we asked respondents here to pick the top three, and that's why the percentages in the graphic add up to more than 100. Notice that the importance of flood zone designation is not very high up. The red numbers, as you see, about 1 in 10 indicated flood zone designation among the top three factors affecting home purchase choice. And insurance rate was selected by only 5%. But I should note in previous years, that was in the previous year, and consistently over the last 5 years since we started asking, it hovered around between 1% and 2%. So really minimal, a minimal number of homeowners consider that among the top 3 decision-making factors about home purchase. Florida, believe it or not, being the most flood-prone state in the nation and having about 40% of the flood insurance policies, has no flood disclosure law whatsoever. Federal policy does currently require lenders to notify borrowers, but only if they're required to have flood insurance. There are no statutory or regulatory requirements that the seller disclose past flood damages. So that is a significant policy implication, and we see the results certainly in these responses. And I wanted to finish kind of related to what Dr. Hamid was talking about with the graphic that's not based on our hurricane poll, but that is included in an article that my colleagues and I have prepared and will be presenting at the conference next year, probably published sometime around that time, in which we examine what are kind of developments, historical developments, and historical choices related to insurance rates and mitigation more broadly. So the graphic here, which is using the latest data that was available to us at that time from 2020 from the National Association of Insurance Commissioners, shows the profit on insurance transactions. And if you recall, Dr. Hamid mentioned significant losses incurred in some seasons. You see 2004, profits went down by almost 173% as a result of that very active season, very deadly, destructive, and extremely active with about 61 billion in damages. In 2017, on the right side of the graphic, 21.2% is the number that's shown there. We had Hurricane Irma, if you recall. And then in 2018, about 36% decrease was Hurricane Michael that caused about 25 billion in damages. I will leave you with that, and I just want to say that if you again repeat, if you wish to obtain this presentation, get it from the link. But if you wish to generally get updates from us on these topics, as well as many of the other topics that the Metropolitan Center is researching related to housing, economic development, inflation even, and other policy areas, please visit our website and connect with us either via social media or sign up for our newsletter, monthly newsletter. We won't inundate your mailboxes with too much messaging, but in the monthly newsletter you will see some of these topics, and you will stay current also on when our article is ready for publication with a bit more detail on insurance costs, on premiums, and obviously on our hurricane poll insurance related questions as they talk about preparedness and perceptions of risk for Florida homeowners. Thank you, and if you need to reach me personally, that information is also on our website. Feel free to reach out to me directly. Thank you. And I guess we'll open it to questions now, right, Lillian?
Yes, thank you, Maria. Thank you to all of our presenters for all of the great information. There was some comments, not too many questions. Of course, feel free to drop any other questions if anyone has any. We had one earlier in the presentation from Nolo. Why do the loss estimates have such a huge range? 30 billion is a lot of money. So one of our earlier experts might be able to expand on that.
I'm sorry, could you repeat the question?
Yes. Why do the loss estimates have such a huge range? 30 billion is a lot of money.
Yeah, because the models basically have a lot of uncertainty in them. And essentially, you have distributions. And so you can simply say this is the mean of the distribution and this is what our estimate is. or you can specify range. So even individual estimates have a certain range. Even they may say that we have $10 billion, but they have a range. On the other hand, the different models have produced different estimates, and that's a good question. I mean, by their nature, there are differences between different CAT models, and but it's kind of puzzling. You're right, when you have such big range, $30 to $60 billion, and I think part of it is because the flood part is more difficult to estimate compared to the wind part. So the flood part actually has a lot of more uncertainty as to what the damage would be.
Thank you for that, Dr. Hamid. I will read off another comment as well. Not so much a question, more so a comment to see if anyone wants to elaborate on that. So Nancy Dominguez comments, insurers over the last several years have created many disputes that have been resolved with litigation. Changes in policies with massive exclusion or ambiguous language often have to be resolved in court. Adjusters do not take assignment of benefit. There are many laws on the books that are not enforced, unfortunately. I'm not sure if anyone wants to agree, disagree, or expand on that a little bit more.
So my understanding is that, despite a lot of legal precedents and regulations, we still have a lot of fraud. Is that really what the question is? Maybe I'm misunderstanding.
Well, it was more so comments, so that's why I opened it up for everyone to see if anyone wants to agree or disagree or just expand on the comment.
Okay. So you want me to go ahead and say something, or? Yeah, I mean, the assignment of benefit problem is really very, very prevalent. To some degree, the courts have exaggerated it. I mean, there aren't really enough regulations on or incentives or disincentives not to have these frauds. They're trying to. There's some legislation on capping the fee that the attorneys can earn, but that really doesn't dissuade them from participating in these activities. I mean, I've had contractors knock on my door and say, "Hey, we can get you a new roof. Your roof is old." Okay, it's 3 years after Irma. Okay, don't worry, we'll figure out, how to, get the money. You just sign this piece of paper, and we'll take care of it. So I think the regulations are very loose. They're not enforced, and there's enough uncertainty about the damage itself. Even a little uncertainty makes it difficult to really precisely say that, okay, was the roof really damaged or not damaged by the Hurricane Irma, and so on. And that is that uncertainty can always lead to arguments by a good lawyer to get the results that they want.
Sure, if I can add. Okay.
Yeah, I'd like to add that a lot of discussion and a lot of proposed legislation along those lines relates to the age of roofing, where I assume that experts can honestly disagree, but there's a concern that without putting an age limitation on roofing, you're really saying that insurance is a de facto maintenance program for roofing. That basically the way, unless there is an age limitation on roofing, that we are all subsidizing roof maintenance rather than replacement of depreciated value, which is has been the proposal in recent years, and this gets batted back and forth. But I see some people are commenting on, should there be enforcement or different type of enforcement, or how the public adjusters should behave. Well, there's also this question: should there be a limitation on how long you insure roofing, and should it be depreciated? And this is a hot topic, and it's something I'm dealing with in my homeowners association with our master policy. So that's another component of the roof insurance problem.
Generally, it's a 30-year. If you have basically less than 3 years of what they call life left on, they won't insure you, or they'll drop you. So, if you want to switch to a particular company and let's say they estimate the roof life is 30 years, if you have less than 3 years left on that, then they will not insure you, and they'll ask you to replace them. But what is happening is that there are many companies who are becoming very conservative, and they're saying we're not going to insure any new policies which have homes which are older than 15 years. And this is becoming a big problem.
I wanted to get to a question we had earlier from Shafin, I'm so sorry if I'm mispronouncing. The question is there a model that exists where damaged homes can be mapped and residents connected via this platform? Basically, homes can be mapped based on severity of damage, etc.
You mean, are there models that will basically give you estimates of what the particular damage could be in individual houses? Is that what you?
Yes, I believe they're asking if there's a model of that sort.
The modelers, I mean, the estimates are accurate for a portfolio of policies. Okay, so you have a certain number of policies in a certain area with, say, a particular deductible, which is, they're all masonry built with hip roofs and so on. So what they're doing is they're basically coming up with some kind of average of that portfolio, and they can be pretty accurate. When it comes to individual homes, there's a lot of uncertainty. You can get a better picture as to what the average losses would be in a group, but not in. So they're reluctant to do it for the litigation risk or whatever. I mean, if they rate a house as excellent or give a 3 out of 5 star or 4 out of 5 star rating, which the models can, but because of the uncertainty, house suffers a lot of damage. Let's say we start rating homes and people buy houses based on those ratings, and then later on it turns out that the house was more vulnerable or had a lot more damage. You're going to have lawsuits and liability issues. Modelers don't do that. They're not willing to rate individual homes.
If I may interrupt, Shahid, my question is basically a bit different. If you're not able to map homes, not based on insurance needs or anything like that, but mapped homes based on damage, mapped homes based on the severity of damage, and keep this information private between the individual and the company itself, it becomes very difficult for insurance companies to assess and deal with claims. So I'm just wondering if there's anything out there, because that's what we work on. That's what we're working on.
Okay, the CAT models basically do estimate what the loss of each and individual home would be based on the features that they have and so on. But typically they don't have enough information on individual homes to really do a good job of estimating it. The home could have all kind of features, but that data is not available. As I mentioned, we have almost 10,000 vulnerability functions, but damage functions, what kind of damage you'll have at different wind speeds. But they require, to be able to pick the precise vulnerability to do the estimate, we need to know we need to have information on 20 different things. Details of the roof, the details of, the roof to wall connection, and all kind of, information. And that's not available usually. Insurance companies can't provide it, tax appraisers can't provide it. So modelers cannot really give you a very good estimate. And they're not going to go about and doing it for individual homes. It's just not worthwhile for them to sort of have somebody individual come to them, okay, run the model for our house and I'll give you all the information. No, it's not going to work. So, so essentially it's more, they're aiming for accuracy more for a portfolio or of policies of similar features rather than individual homes. But if you had information on all those variables for a particular home, we can give a, to the extent how good the model is, we should be able to produce a reasonably good estimate of what the damage could be.
We have another question from Cynthia Hernandez, and I'd like to direct that to Erik. And she asked, why was Hurricane Michael moved from a category 4 to category 5 1 year after? Could it be that insurance companies don't want to pay?
Well, to address the question itself, Michael being upgraded from a category 4 to a category 5, that was done after further analysis by the National Hurricane Center to make that upgrade. So it was done from a meteorological standpoint, from a science standpoint, and additional information when it came to observations. And that's what happened and why the National Hurricane Center upgraded it. The second part of that, that's a whole nother question, but really unrelated to why Michael was upgraded.
And a follow-up question to that, somewhat related to the insurance companies, was also that if it was upgraded so that homeowners have to pay their deductible instead of the insurance company who doesn't want to pay.
Is there truth to that changing the storm from 4 to 5 determines how much the insurance company will pay? I don't think that's the case. Erik or Shahid?
I don't know that for sure, but maybe Dr. Hamid or Dr. Frank, I don't know.
Yeah. So again, question is about how upgrading from 4 to 5 will affect
Insurance companies' ability to pay, or
well, I mean, when we in our modeling, when we use some historical data on how many Cat 5s we've had and 4 we have had and so on. And so if it's in, if the basically if it's increased from 4 to 5, then obviously our assessment of risk, because we do it based on all the landfall hurricanes in the past 100 years, that's going to go up somewhat. And you have to understand that in any particular given area, only very few hurricanes will actually land in 100 years. I mean, statewide, we might be getting, a hurricane hit, at least 40% of the time. But if you look at Miami-Dade County, we've had Andrew, only a few hurricanes in that particular area. So if another Andrew comes by, that would double the number of observations or the risk assessment. The probabilities will change dramatically. It just takes 1 or 2 hurricanes in a particular. So for that area, the risk assessment will go up a lot, and that's certainly going to increase the insurance rates quite a lot, from a modeling perspective. And so especially for the Panhandle, that one addition of 1 hurricane observation in our CAT model will have significant impact on estimates of future damages and so on, and premiums.
So we have a question for Dr. Ilcheva. Well, actually, I can answer the first one regarding the research on mitigation and preparedness. The study is published, as she has mentioned. That is on our website, metropolitan.fiu.edu. I'm happy to share that with you as well. The following question for you, Maria, is where age demographics or demographics or generation captured in the last survey on the areas considered most important when purchasing a home, to compare the difference in generations, if there is any.
Yes, we do capture extensive demographics, including age, race, ethnicity, presence of vulnerable populations, income ranges, all of that. I haven't looked at it for this year's survey, but conceivably, and that's a good question from our FIU colleague Emma. There is a difference between those with children and those without, right? When we talk about schools, and we have a significant number of responses in the 65+ age group, as well as in the primary ranges, 35 to 54. Obviously, schools, quality of schools has a bigger role to play. But with regards to the important questions about flood insurance, about flood risk or homeowners insurance, that is consistent across the groups, right? So there is variation in the top 3 factors based on age, but not when it comes to mitigating risk, right? Consistently low percentages regardless of the age group with regards to preferences or the influence of these factors on purchasing choices.
Somebody just, I think, asked a question about why does insolvencies happen and so on the chat. My insurance company, St. John's, went bankrupt this year, so I had to move to another company for a significantly higher premium. And the reason that happened, why they went bankrupt or they claim, is because they had more lawsuits than the entire state of Texas or the entire state of New York, and their legal cost and lawsuit cost, for the reasons I mentioned, became unaffordable, and so they just basically became insolvent and they shut down.
So yes, so the question that Dr. Hamid was referencing was from Nancy. Has anyone reviewed the insolvency reports that forensically studied the reason for every insurer insolvency over the past decade? Let's see if I've missed any other questions or if anyone has anything else to contribute. Well, a general question from everyone, and I'm happy to do so, of course, is if the presentations from our panelists will be shared for everyone. I'm happy to do so if that's something that you all want to share with everyone. And I don't see any other questions here. I'll give everyone a few minutes if there's anyone that has any final closing questions. All right, so we have one question here for Erik. With COP27 happening now in Egypt and with a focus on lowering global temperatures, which doesn't seem to be happening, is there any proactive measure local governments and individuals can take to mitigate our risk?
Well, you look at it in different ways. There is ongoing research with regards to climate change and how it may affect hurricane seasons and hurricanes. And the research there seems to be a more of a consensus on the research that, hurricanes may become stronger with more rapid intensification because of warming sea surface temperatures, slower moving because of changes in the upper level wind currents, and therefore wetter. They spend more time over one area dropping more rain and the atmosphere getting more moisture. So that's the science side of it. And it's something I mentioned in my presentation. Where do the hurricanes go? They go along the coasts, and the coast of the US, the Gulf Coast, Florida, the East Coast. And we've seen, the rise in population. So exposure, buildings and people in harm's way. Everyone wants to live near the coast. Everyone wants to live in Florida for the climate and see the ocean. But again, now that's that collision course with exposures up against where the natural hazards occur. So decisions have to be made. First of all, building codes. We have the best in the country here in Florida, but that's not the case once you leave the state of Florida. Building codes can and should be improved in all states, and especially in hurricane-prone areas. And then how are we building and where are we building? Tough decisions. And especially if you couple that with sea level rise challenges for the future as well. So this word of resilience moving forward, there's no one solution, but these hazards are not going to go away, and they just get more and more and more expensive. billion-dollar hits, no matter where a hurricane makes a hit now over the coastline, because it's so urbanized and the population has grown so much. So moving forward with resilience, things have to be done differently for what we're up against in the future.
Yet interestingly, after each major hurricane, what is the phrase we hear? We will rebuild, right?
Right.
There is a big difference between what we should be doing and what we are actually willing to do in the short term. Lilian, do we have any other questions from the audience?
I do not see any other questions or comments. So I'm happy to give everyone back 5 minutes to get up, stretch, and close out the rest of their day. I want to thank everyone for joining and for taking time just to listen to our experts here at FIU. And I don't have anything else for anyone else. So
Final question for you, will the recording be shared? It will, right, on our YouTube channel?
that's correct. Our final recording will be on our YouTube. And as Maria mentioned, so our hurricane poll is also on our website, metropolitan.fiu.edu. And this is all, of course, information that's available for everyone. So I'm happy to share. If anyone has any questions, feel free to reach out. You know how to reach me, ljarquin@fiu.edu. All of our contact information is at metropolitan.fiu.edu. Send us a message, email, share, call. We're happy to take any comments, feedback, anything of the sort. Thank you.
Have a good afternoon and happy Veterans Day.
Thank you, everyone.
Thank you, everyone.
Good job, LJ. Stay well.
Thank you. Not too stuffy or nasally for you.
Did a great job. Thank you.
Thank
And
you.
it worked. It went well. I don't know who that one person was. It's very.
I have no idea. I wish I knew.